Good morning, traders, and welcome to the Bookmap live trading webinar with Scott Pulcini today. So Scott trades futures. You guys know who he is, but we do this every Thursday with Scott, and we go over how he trades, how he uses Bookmap, how he reads order flow, and integrates that within his trading. You guys know who Scott is. He has just a pretty amazing story here about his history trading. 10% of the S&P E-mini was featured in a book with Dr. Brett Steenbarger, and it goes on and on. Anyway, here's Scott's information here for if you want to reach out to him. You've got his email, you've got his website, trading room here. He's got educational courses on our Bookmap marketplace. I'll put all this into the chat if you want to reach out to him. I need to go through the disclosures here, and then we'll turn it right over to Scott. All right, general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, are you there, Scott? And cannot hear you. I don't know if you're there. You are.
Hear me now?
Yes, there you are. All right, so let's if you can present your screen, and then I'll rebroadcast it in here.
Got it.
Got it. All right, how are you?
I'm great. How are you?
I'm okay. I'm okay. All right, take it away, Scott.
Okay, thank you. Good morning, everybody.
Gold iceberg 5 BC, 151 contracts.
All right, there's some stuff firing off in gold here. Important level, which we'll go over. So, see here, there was this is like 400 stop run or 300 stop run here, this yellow zone, and then more stop run or more stops came in here. You can see back to back 146, 155, so another 300 total. You can see the sweeps of the book as well. And now you have some buys coming in. This is not threshold, so I'm not going to draw anything, but gold is bullish for right now. It's going to be interesting to see what we do here. You can see in the bigger picture, got this pretty large month-and-a-half balance area that we broke out from, and it's just been basically building balance. And all we're really doing is coming down to the bottom of the balance, which is the top of this guy. So this is still bullish, intermediate, long term, right? Doesn't mean you can't pull back like we're doing now, but your counter moves are usually going to be short-lived, and then the bigger moves are going to be like that if this remains bullish. And up here, the only time I'll question this being bullish is if we violate the high volume node of this balance area. So that would be way down here. So this could come all the way here and still be a bullish market as far as this structure stuff. So that's why
NQ stop sell NQ 153 contracts.
That's why using real-time volume really helps you, because if you're bullish here, you're bullish over here. You're like, yeah, this thing's ripping. Everything tells me this is going up, and then you endure this, and you have no idea that there's stop runs coming out, firing off, and you sell stop runs, and you should probably not be in your long right now, or you should wait for the stop runs to fail, etc. So, let's see what's going on in Nasdaq. I'm very interested in these markets selling off here.
S&P iceberg 5 ES, 716 contracts.
All right, so I'm short ES. We'll go over all this here in a second. There's a new setup in here. I'm going to draw this first considering I have a position on. I just shorted while I was showing you guys gold. I should have went to this first, but you can see this buy ice coming in. So what we will do is mark the zone up, and then I can trail my stop based on this new setup, this new volume event. In case this thing doesn't break.
S&P Iceberg by ES 949 contracts.
All right, so there was a ton of sell ice before the open and into the open. Oh, guy in my room.
NQ Iceberg by NQ 176 contracts.
Added it all up, it was like 7,400 sell ice. And now we're failing out of that zone. So here's the
NQ Iceberg sell NQ.
Goodness gracious.
150 contracts.
Alrighty, let's see what's going on in here. Nothing here. Good sell ice coming in. I'll come back to that in a second. So right now ATR is 6.38, 5-minute ATR. So that means 6.38 points. The way I trade these, 5.74 is 90% of an ATR. I've moved to 90. It's been working a little better. You guys see me get ticked out 10 times a day. So I was at 75, then I was at 80, then I was at 85, now I'm at 90. Just trying to find that sweet spot where the algos don't tick me out every time. So 5.75 points above here, I will stop out of this trade. So 31.25. You can see that's right at the bottom of the zone. So what I'm going to do is I'm going to go a little bit higher than that. I'm going to get right inside the zone in case we get a bounce and I don't get stopped out. So, and we'll go over why I only have 2 on here too as far as the risk. So I'm going to stop out right inside there. Hopefully it won't get up there. And I'll actually add to this trade as well. So that's that. And then here you see the sell ice coming in NASDAQ, 175 here. So you draw these zones, you look for the spike, you incorporate all the prices that happen in the spike, and you draw your zone. So that is, I try to use
S&P Iceberg by ES 711 contracts.
Right,
NQ stock sell NQ 367 contracts.
Alrighty.
S&P Iceberg by ES 701 contracts.
All right, so there's another stop run. I mean, I'm not even getting a chance to do anything here.
941 contracts.
This is trading like there's some kind of news out.
S&P Iceberg sell ES 1045 contracts.
So this is a new setup. I will trail my stop based on this. I mean, I'm not even getting, it's like nothing's going on and then everything's going on. So this is the new one. So 6.84 is the ATR now. We'll go over why I use the ATR and everything else once it settles down a little bit. So 6.15 is 90%, so I round up 6.25 points above here. I will stop out. So that puts me at 25.50. So I'm able to bring this stop down 6 points now because of the new volume event. 26.50. There we go. All right, so quickly let's take a look at our Ludwig levels. These are pertinent to my trading and understanding where we are as far as short-term support and resistance. So you can see here we bounced. This was the trade. I should have been more aggressive here before because there was a bunch of sell ice at the open and we kept moving a little higher. But I mean, you can see how well these things work. I mean, bounced, and now we're down at the yellow lug. So this is a really important level. See yellow lug, and that's confluent with this market profile composite. So if this market is going to remain short-term bullish, this needs to hold right here. If this gets outside of here, it's going to get ugly. So, and then if we get in here, it's going to get really ugly. That's what I've been calling for the last few days. Yesterday was a terrible volume, relative volume, low volume, nonsense rally, and then today, now the big money's coming back in and pushing it back down. So, really important level here. NASDAQ as well, same exact thing. These are really, really important levels right now. We've already violated, so we couldn't even tag the red here, got below the yellow, and now you expect blue. We're right there. And this is like a 3-4 day composite. We'll go over all this. But, you know, if this is going to remain bullish, this needs to hold. If this gets out of here, then, again, it's going to get ugly. So let me get my stuff there so I can have multiple positions on and get smoked on a bungee jump. That should be fun. Let's see. That move there looked like there was some kind of news out. I don't know. I got my squawk on and I didn't hear anything, but we'll probably find out, 20 minutes later after the market moves 50 points. Yes. All right, so this was that stop run. Try to color the stop runs yellow or white so I can distinguish. All right, so now we're just basically bouncing in between. That was that sell ice. Here's a stop run. We know we're below the yellow lug. So I will short this, well, depending on how close we are to the blue lug, because I don't like taking positions right before the blue lug. As you saw, like the red one, they are very, very powerful. So, I won't, depending on the risk reward, if there's a setup, which there is here, what's the distance to get to this versus what I have to risk? That's what I have to judge, right? And if we're like down here and I get a short setup, I don't take it until we bust through the lugs and build new lugs, right? Especially here, like I said, this is really important area. So, I want to make sure we can get out of that, and I want to see what my risk is here. So this blue lug is 13,972, so that's a good 90 points away. ATR, current ATR is 31, which isn't crazy for NASDAQ. I remember a few weeks ago or a month ago was at 100, so that's not too bad. So, you could trade this off of the return to this if this fails, right? The safer play is to always revert to the most recent setup, and that was the stop run, right? So I will trade this because the ATR is not too bad. I will go short aggressively if we break this zone. Again, you could trade this. And what I was explaining in my room, and I've said it many times in here too yesterday, is, different people have different, because some guy was talking about what he thought was a bull flag, and I disagreed. And then we started to talk a little bit and about, what people use or what they look at. And, you can come up with your own ways of using this information. The point is, this information is the science. There's no questioning this was a stop run, right? How you trade these zones is up to you. Like I tell you every week, I've been watching this for 3+ years now and thousands of setups. And the way that I've determined the best way to trade these is to, wait for an ATR, et cetera, et cetera. So the way I'm trading them, it doesn't mean I recommend you follow what I do, right? If you're first starting and you're trying to learn how these work. But once you get better at them, you can trade them however you want. So my point is, like on this return to this, you may say, well, what was that? Why did my screen go dark there? Hold on. Okay. My point is, you may say you're seasoned, you're like, this thing's going down. This was a huge move, blah, 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 whatever reasons you use. The 200-day cross the 50-day, whatever you're using, you may say, I'm going to short off of this zone. I'm not going to wait for ATR, 90% of an ATR below the stop. You see what I'm saying? So the better you get at recognizing these and understanding them and watching them, then you can come up with your own ways of trading them. So enough chirping. Let's put the order in here. 29.74 is your ATR. 26.76, so 27 points below here. I want to this trade. Then I have to determine what my size is going to be based on my risk, right? So 27 points below here. So 30 points puts me at 11, so it's 14.25 is where I can short this. Spot gamma volatility trigger, which I like. And then we'll also be outside of this profile as well. So that's not a bad, you got this other one here, right at the exact price that I'm going to short it, but this is the most important because it's the most recent. And again, this composite is, like, what's today? How many days is this? Let's see real quick. this is a 3-day composite. So remember, this is, most of you guys know what market profile is, but all this is showing you that 70% of the day's trade occurred in this, and this. And if they overlap prior days, you merge them all together and then make one big composite value area. And they're really, really, really powerful for areas. And, you could just seriously wait. When you're in the middle of a composite, that's when you're going to get chopped up. You can wait for edges to make trading decisions, right? Especially if they're confluent with other things, right? But that's, and then you look at your bigger picture stuff as well. But you can do very well just waiting for Bookmap setups, the SI indicator setups at edges. Whether you played, that it holds or whether it breaks. Right? All right, let's see what's going on in the CS. So I'm hoping this can hold. If not, then I'm basically going to scratch that trade, which is fine, right? I mean, of course I want this thing to go to zero, right? But I don't ignore bullish setups. This can potentially be a bullish setup. This is the most recent setup. He had 1,000 buy ice. He had 700. Actually, this is a double whammy. This is one of my 6 setups. So this is the dumb money, the retail trader. Again, don't be offended. I'm a retail trader as well. The dumb money puke into the waiting hands of hidden buy orders in the order book, right? This is the big money. So this is one of the strongest signals as far as which way we're going to go. If you see the big money coming in and buying while the dumb money pukes, a high percentage of the time, this will be the end of the down move for now. So let's mark this. I usually make the double whammies dark blue to help me distinguish. So if this does hold, I'm just going to stop out 90% of an ATR, basically exactly where I shorted it, right in there, and then we reassess. That's a high likelihood of happening. Hold on 1 second, I got to trail my stop on my other accounts. Any questions, Bruce, while I'm doing this?
Not yet. Oh, I'm sorry. Hold on a minute here. In YouTube, yeah. Goon05 is just wondering about where this crazy selling might be coming from. What your thoughts on that? Yeah. And then,
well, you're never going to know where it's coming from. I have a pretty good idea from what happened earlier today, right? So if you see this before the open, this all started, and that's why this black zone is humongous, and that's why I only have a 2 lot on. So I was going to get to this, so it's a good segue, right? You see, again, some of my room added all this up. It was like 7,400 sell ice contracts from here, basically all the way up to here. I didn't draw the top of this because the last one was only 400, but somebody was selling this. All these aggressive buyers were like, yeah, this thing's going to 4,500. Oh no, let's puke them out, right? That's what I would say a lot of the selling is. Guys, all these guys that were so gung ho, and then they're like holding their breath, puke, right? And that's that. That's the start of that, right? And now you have paper coming in your way. And some of this could be some of that. You're never going to know, right? Ever. Unless you are God Almighty. You don't know what the bigger players are doing as far as why, right? And that's like the big argument when the SI indicator came out, like you had all these competitors like, you don't know it. And they misunderstood too. They're like, well, just because it's buy ice doesn't mean the market's going up. And just because it's sell ice doesn't mean it's going down. Well, of course, right. But you still want to have a good idea what the big money's doing first and foremost. Big money's not always right. When they're wrong, it's tremendous, right? So, if there was, we've seen many times where this thing is, buy ice, and then it just dies, right? So the point is you want to know what they're doing. And I lost my train of thought on what I was trying to get at there, but this was aggressive buying and then breath holding, right? Whoever was buying this is like, you have everybody knows, like you have your threshold where you have to puke, right? Where it's like too much pain, you're out. And that's what that was right there. And it could be just the beginning. So the other thing I keep an eye on, and this is not publicly available right now, and I don't really know why. You know, I used to do the Taz trade room, and he has this product which is very, very powerful. They're redoing it, they're revamping it, but it's not available to purchase right now. This is called the Edge. So what this is showing me is, so I have it set for the S&P right now, right? So this is showing me all 500 stocks in the S&P, how many are above or below their 5-minute TAS boxes. So 5-minute TAS boxes, we'll look at that in a second. They're just little mini market profiles. So when this thing gets extended, meaning you see the red get above the 67% line, you see the percentages over here. Many times that is the end of the move, and you're going to get a bounce. If you see the green above here, many times that's the end of the buying, and you're going to get a little bit of a sell-off, right? So the point how I use this is, just because red gets up here doesn't mean you just want to start buying blindly. What you want to not do,
Stock 5 GC, 289
what you don't want to be doing is, if you see this is getting close, right? Say 57%, this gets over 70, 80, 90%, which it can get up to. You don't want to be selling at that point, because this will revert, and the algos come in and pop it the other way. So, so I keep an eye on that as well. So it's a very good likelihood I get stopped out of this trade, but we will see. Let's see what's going on in gold. Gold and crude have been extremely difficult to trade lately with all the headlines and the war and everything else. So I would be very careful trading these, especially if you're new to the market. But now we have buy stops going the other way. So we had sell stops, and now here comes 300 buy stops, and this is the most recent. So what I'm going to do is I'm just going to remove this sell stop run from before, because this is basically right on top of that, and let's make a new zone, and we can trade off that. So we've already seen, it's already shown its cards basically, that sell stop, the last sell stop below is rejected. That's a Dumb and Dumber. That's one of my 6 setups, right? And now you're getting a buy stop the other way, so I would probably expect this, because of the bullish nature of this market right now, that this will turn into a stop and hold. So you have a Dumb and Dumber. Again, these are my names that we've named these setups. Makes it a little comical as well. That's your stop run, sell stop run. Instant rejection. That means that's not real selling. Yeah, it's selling, but it's not. It's selling with a purpose, or is the guy's puking? It's guys puking. Instant rejection. Now you got more pukes. Now is this going to turn into the pukes initiated, and then the big money comes in and holds it and runs it back up? And that's what I'm thinking is going to happen. Again, that's my thought, but I will change if the volume tells me something different, right? So let's take a look at where we're at here as far as lugs and market profile. We'll get into this cumulative volume and stuff as well a little bit. I was checking this earlier, was not drawing new lugs. I hope there's not. This is incorrect, because this should have drawn new lugs by now. So she's trying to switch over. She's like redoing this, and she's got new versions, and she's been having problems with that. Natural gas number comes out in 5 minutes. 5 minutes, my alarm. So you can see here what story. This is what I try to get through my room all the time. What story do you see occurring here? Right. So this was, lugs isn't really telling us much right now. I'm assuming there's new lugs here, and there's a yellow lug right where we're at, but we don't have that to lean on right now. So let's just look at this, right? So what happened the other day? Right? We launched out of the most recent market profile composite. We retested this guy here. Couldn't hold inside. That's bullish. Boom, closed here. Next day, just traded in a range. Right now, the same exact thing is happening, right? The other day, couldn't hold. Today, couldn't hold. There's your stop run, Dumb and Dumber. You're back out of here. Here's another stop run. So if this holds, I will be gladly going long and watching this. This all is in line with my thesis of bullish thesis, right? Again, here's your balance. Here's balance. All we really did is come down to the bottom of this. This is just one balance. So I can see this holding, because this is the mammoth that it's holding the top of this guy and then coming right back. And now we know market profile. It's rejecting out of that most recent composite. We potentially have a bullish real-time setup, real-time volume setup, which is the most important. We take the trade, right? So Again, I don't know, I use the lugs to determine if I'm gonna be aggressive out of the zone or if I'm gonna wait for a full ATR retest. And I don't know why this is not drawing new zones. Hopefully she's on this webinar and she can make some adjustments, but prior blue is important as well. So usually when you get new lugs, I'll show you examples of this, but they'll draw new lugs and the yellow will be right on top of the blue. Then you'll have a red and then you have blue down here. So if the market's truly bearish, it should hold directional yellow and prior blue. It should not get above here. So now we got that factor in as well. So if this latest stop run, let me get a different color here now. This latest stop run, which is right here, if that turns into stop and hold, we're going to get back above prior blue. We held outside of this. That's all bullish, right? And then you have your real-time volume telling you we're going back up. So my point is, what I usually do when we're right at the yellow lug is I wait for retest failure, which is probably the smart move in gold because it's the chop fest, algo-ridden chop fest. So there's your ATR. Just move the decimal point, 31.4, right? So that will say 32 ticks. So I'll wait for a retest failure on this. Again, it doesn't always fail, or retest, I should say. So the meaning I need to see 32 ticks out of here. So I need to see this trade 40. Then I would need to see a retest of this area, could even come all the way back in here, and then once it fails back out of here, then I'm in at 90% of an ATR, and then my stop goes 90% of an ATR below this most recent structure or volume event, right? You could, again, that's how I trade it. This is the best way I've determined to trade these after all these years, right? So you could say, wow, Scott, that's a lot of bullish stuff Scott just showed me. I'm gonna buy it right out of the zone, or I'm gonna buy it at a 90%, I'm going to be aggressive. I'm not going to wait for retest. You can do whatever you want. It's your money, right? But I'm telling you, the safest way to play these, especially in these algo clown markets, is you want to wait for retest failure, right? And especially when we're at the yellow lug. So my point is, as you get better with these and understand them, you can trade them however you want, right? But this is the science. The science is this was a stop run. This is the area. There's no disputing that. How you trade it is up to you. I highly recommend, again, that you trade it the way I trade it until you figure out what you're doing. All right. Let's take a look, see if I got stopped out of my ES yet. No. Oh, look at that. Look at the new 90% holding tough. No stop out. Yes. So technically now, if this, we didn't get an ATR above this most recent double whammy, right? So technically, I can still short this. I can add to the short if this fails and comes back, right? Let's make sure ATR. So the reason I'm using ATR, well, this market's, I love how it's just like everything's firing off and then everything just stops. There's nothing now, which is fine because it helps me explain things. 6.92, you can see right there, just 6.92 points, right? Natural gas comes out here in a minute. 6.25, 6.22, so you round up 6.25. So let's make sure this is
15 billion withdrawn in forecast.
whatever that means. I don't even know what that means as far as if that's a lot or a little. So 25.50 is my stop price. So I can actually move this down now up to full point. So what I'm doing is I'm moving my stop not because of P&L, right? I'm moving my stop because of the dynamic volatility change in ATR. That's what this helps you with. So I get a lot of questions about this lately, like, well, why do you use ATR? I don't understand what you're doing there. Well, because when I first learned how to use these and understand what this was, when I made my course, I had a standard amount of points that I would use to determine what kind of setup it was, right?
Nat gas iceberg sell NG 153 contracts.
We will keep an eye on natural gas because that market. So I tell my room is you guys want to have other markets that you are watching instead of just this ES. I almost used a bad word there. ES or NQ. So when these markets are not trading, you can go to another market. The ones I recommend right now, I would recommend staying away from crude and gold. Natural gas and soybeans are incredible. Like, we'll mark this up and I'll come back to what I was talking about the ATR here. But you can see here, numbers out. You got some, this isn't big, but I use reset mode, right? So you can use different modes on here. And once again, this is up to you how you want to use it. I use reset. You've got, and when I made my course, I use exponential, right? We'll show you. It doesn't look that much different, right? But I want to see spikes, right? So when I use the reset, you can see the spikes and then add them together if they're right on top of each other. So I just like to see that. It's just a better look. You can use whatever setting you want. Just literally Google Bookmap Wiki, and it explains the different settings, and you tailor it how you want to look at it. So this is actually a pretty big zone here. You got that all the way up to here. But this thing it's pretty incredible. Well, first and foremost, what you guys should all notice this, right? That's liquidity. Those are big orders. Where do you think we're going? We're going down there eventually because the big money always gets their way eventually. Why? Because they're the big money and they can push the market down into these orders. And they want to get their fills down here. They don't want to buy up here, obviously. So they'll come down here and then the market can go up. And it's over and over in every single market. So that's that zone. This zone's insane. This is like 100 and, oh no, this isn't bad. I'm sorry. This is a 50 tick zone. So let's just take a quick look at the logs. I may trade this. There you go, right at the red lug. So the way I trade these, and this is actually confluent with where I think we're going with that liquidity. So when we're at the red lug and it fails and we get a signal, I'll trade the setup aggressively. My normal way of trading is if we're above directional yellow, the only time I don't short aggressively. So say the short setup came down here, I wait for the ATR retest fail. But if the setup's at the red lug, then I'll get in aggressively, meaning 90% of an ATR. So let's see what we got going on here. ATR is obviously elevated because of the number. It's 43.86, so 44 ticks. Right, so to be aggressive on that, so we put 43.86, 39 and a half, so we got to round up because there's no half ticks in here. So 40 ticks below here, I can short this market below the bottom of the zone. But so what I'm going to be risking though, because this is a large zone, I have to risk my entry, which is 40 ticks below here, and that's actually right through all that liquidity. So I don't really like that, but or it's pretty close to it. So the bottom of the zone was 09. So that's 71, right? So that's where I'll enter that, right? But now look at the risk I have to take here if I want to take this trade, right? And trust me, it's worth the risk in this market because this market's moving 300 ticks at a time. But I have to risk the 40 ticks. That's the 90% of an ATR. If I get filled, I have to risk 40 ticks above the zone and then the amount of the zone. So you're talking about 140 tick risk here for this trade. Right, so you got to determine, hey, do I want to trade this setup? Am I willing to risk that much? I mean, you just cut down your size, right? But if this thing can hold this red lug, and this gets motoring down, we're coming probably to at least here, and maybe all the way here. And this is huge. This is over 300 ticks away, right? So that's how you determine, or how I determine whether I want to take that trade or not with that big of a zone. All right, so let's see what's going on here. Phil, of course, you little pigs. All right, so basically scratch that trade. Thought my 90% was going to keep me out of that. No dice. All right, so we move on to our next trade. So I want to make sure we did not get an ATR above this most recent setup. If we did, then this short is disqualified, right? And then we may put on a long here. So the top of this zone was 50, 52. We got all the way up to basically 82 and a half. So that's 30 points. Is that ATR? Right there. That's not surprising either, right? This is the algos. They know what the ATR is. They're set to ATRs. There's algos that are set to ATRs that just rip it right back once it gets an ATR away from areas. So that was pretty much an ATR. So what I'm going to do here, let's just make sure, because I cost myself money doing this yesterday because or natural gas. I was complaining about this the other day. It was like it was like a tick away from the ATR, and I didn't take the trade, and it turned out to be a 300 tick straight move that I was not in, and it was very disappointing. So 52. Let's just make sure this exact price up here. Come on. I mean, that's like right there. Look at that. Yeah. 8250, so that's above the ATR even right now. So I think it's expanded a little bit. So because it got an ATR above this most recent stop run, the yellow zone, this short setup is now disqualified, right? Now what I can do is if this comes back, retest this zone, I will go long at 90% of an ATR, right? So I'm dynamically, one, using the ATR to understand volatility and just determine, I'll get back into why I use ATR, but that's how I determine volatility, and that's how I just determine if this what the setup is, right? So if this is truly bearish, this setup, it should not get a fully, if I'm in an ATR above there, right? And it did, and it went a full it went to full ATR. So now if a retest fails, I can go long because it never got an ATR below this zone. See what I mean? And I also know we're still hanging at that market profile bottom, or yeah, the bottom of this, right? And that means this could, you got to set up, if the sellers really wanted to step on the gas there, they would have followed that stop run and pushed it right out of here. Instead it held, now we're back here. So because we're below the yellow lug, I need to see, here's your stop run, I need to see full ATR, which we got, retest, failure, and I will go long. If we were above the yellow lug, if that stop run happened, I'd go long aggressively, kind of like I'm going short aggressively in natural gas. So we'll see what happens here. So back to what I was saying about the ATR, why I use ATR. So when I made the course, when I first started watching this, volatility was much lower. And you have to have a way to determine what the zone is, right? And I came up with the 6 different zones. There was 5 in the course. We've added one other one called Step Brothers. We can go over that too. But you don't know what this is until it moves away, right? Well, how far should it move away? Well, at the time, I just had a standard amount of points or ticks. So ES, it was 3 points to determine, hey, is this a Titanic setup? Or, I'm sorry, if it goes down below, then if it goes more than 3 points, then that's broken ice. If it holds, if it gets above 3 points, then it's a Titanic setup, so on and so forth. So that was the way I distinguished what it was. As I got, started watching it more and more, so it was 3 points in ES. It was
NQ stop sell NQ 155 contracts.
all right, so this is a brand new setup. So now that whole idea with the retest failure, that's why I wait. So did you see there, right? I'm like, okay, this could be bullish. Did I buy right when it came back in that zone? No, I need to see this get back out of here, then I'll buy it. And I just saved myself a potential loser, right? And now you have a new setup on top of it. So now we'll hopefully be able to draw this. My threshold is usually 150 at least. I like to see over 200, like this one was like 180. Trying to determine. I'm going to draw this just because this is such an important area in the market profile. I normally, if it's right in the middle of nowhere, I probably wouldn't draw this because the size is just not enough. I want to see closer to 200. But this zone is pretty much going to determine what we're going to do here. If we're going to break or hold, in my opinion. So let's see. Hold on. All right. So once again, because we're below the yellow lug, I need to see full ATR, retest, failure. Below here, I could, and here's the vol trigger, that's really important. I could short this, I gotta go 90%, so that's already putting me, that's basically like 25 points below here. So I'll be shorting like at 86 or something, right? There's your put wall. So this is what I have to determine now, because we're getting closer and closer to this blue lug. Do I really? This is a great example, right? So here's the sell stop run. Do I want to get in aggressively? 90% of an ATR right here. I don't, because there's a blue lug, and I know how powerful these lugs are as far as support and resistance, right? So I can't take that short setup. Doesn't mean that I think we're going lower. But what I need to see personally is new lugs built, and you can see here, I'm sure I can find 15 examples, right? So this is a perfect example going up. So when we were coming up here, we built new lugs. There's yellow, the new yellow. Here's prior red. This is a truly bullish market at the time. What should this do? It should hold prior red.
S iceberg by NG 153 contracts.
It should hold prior red, new directional yellow. It's exactly what it did. Tried it again, went all the way up, Try to get up here, no dice. That's a signal right there that something is amiss now to turn around the other way. But I digress, right? So the point is, what I need to see now, I can't short this close to the lug because I know how powerful they are. It doesn't mean we can't build new lugs, just like you saw here. But I need to see new lugs, and then I'll wait for a new signal, and then I'll go short. That's just how I trade it. Once again, this is the art. You can say, screw that, man. This breaking out of that market profile, I'm in. I think we're going to build new lugs, and I think we're going to zero. Great. Well, get your money. You do however you want to trade it. So this is again. Now this, I will definitely short aggressively if we can get back below here and then outside this. All right, I was already short, but I got stopped. And now I'm just waiting for a new setup. And it's not surprising. It's bouncing around this yellow lug. It's kind of like, the yellow lug is kind of like a point of control of a market profile area. Point of control is where the most trade happen, right? That's what that's showing you. Many times, just like yesterday, that's where you get the chopping, right? So the other thing we want to take a look at too, what does the relative volume look like right now? Is it supporting a big move lower? Meaning you want to see, so that, explain this every week. This is the Sierra chart. There's other programs that have this. Thinkorswim doesn't have it this way, and they don't have in this view. This is showing you the exact time period for the last 30 days if we are above or below normal. So when you see yellow, that means it's over 200%, meaning 2 times normal volume. That's really important, right? And you can see this down move was over 2 times normal volume. This up move, same. So like we were talking about, this up move, this right here was probably these guys that bought puking them up, right? So the point is, you want to be very careful. If you're at a really important area, like we are at the market profiles, you don't want to see this volume die down. It's just going to sit here and chop your head off, right? You want to see this picking up. That means the big money's coming in, and then you're going to get the extended move, right? Nasdaq's not too bad, but it's just normal. It's nothing big. I mean, do you think we're going to get a major sell-off through that market profile low, composite low, if nobody's participating? No. And this is, the algos know this, right? The algos, since they have algos that play, this is the algo's dream. When this thing turns red like that, I think that's red, it means it's like half the normal volume. That's when algos go to town on you. And then it's just back and forth, back and forth, back and forth, right? And then this comes in, that's the algo's worst nightmare. And this is some of the best warning signs. If you see a spike like this right in the middle of a range, then you're ready. You're like, okay, it's go time. This is going to move big one way or another, right? And that's what we did. This was a failed breakdown, but whatever. It still ended up being a big move. And then there was more, right? So my point is, keep an eye on this at all times to determine, you may be a range trader. I hate trading ranges because it's like every time I decide to play the bottom of a range, that's when it breaks out and runs me over. But there is something to be said for, you come down to an important area like we're at in both markets and there is no volume, there's something to be said for baiting it, right? You need big money to push this out of here. Same with NASDAQ. So if this volume continues to dissipate, then you're going to get a bounce back up, would be my guess. Right? Right there. Both markets, very, very, very important areas. All right, I need a break from talking. Any questions, Bruce?
Let's take a look here. Andrew's bringing up a point here. He's just curious how big money can be wrong. Are they being run over by other big money, or is it accumulation of all retailers? And then also, when and why did you change the entry trigger at 90%? Recall previously it was 75%.
Yeah, I went over that already. It's because I had it at 75 and I kept getting ticked, meaning I would enter a trade. I mean, you guys have seen it 300 times just on these webinars, right? So say we got the ATR retest and I would buy it at 80% or 75%. That would be the exact tick, and then do that. And I wouldn't even, if I had a little higher, I wouldn't even have been filled. So then I'm like, okay, let's do 80. Made it 80, tick. Made it 85, tick. So now I have it at 90. I'm just trying to find that sweet spot, like I said at the beginning of the webinar. that's far enough from the zone where I don't especially get ticked. That's what drives me crazy. I'm fine with being wrong. You as a trader are going to be wrong probably half the time, right? I'm fine with being wrong. I want to know why I was wrong, but I'm fine with it. What I'm not fine with is 5 times a day on average I get filled to the exact tick, whether entry and then it comes and that was the high of the move, or if I'm, say I get long this and I have my stop right here, it comes down, ticks me exactly, and go that's what drives me crazy. And for 24 years of trading, I still can't understand how that happens that often to me personally. Again, that's the oh is me, the market's against me. I understand that, but like I tell my room every day when it happens 5 times a day, I'm like, I'm so glad this is public. You guys can see this publicly, so I know I'm not imagining this, because most traders don't get ticked like 5 times in a month. It happens to me every day, so 5 times in a day. So the whole point is I'm trying to find that exact, area. Again, that is subjective. You can trade it however you want. You can say I'm in 20% ATR after a bounce left zone. I'm in right when it moves out of zone. It doesn't, you can come up with your own way of trading. This is the way that I've determined. All I've done is stared at this thing for 3 years of these setups after setup after setup in all of these markets, right? So that's how I trade it. So that's just the sweet spot. Your other question about, well, how is paper wrong? Is it other paper coming in, big money coming in? Yeah, most times it's very rarely a collaboration of retail traders. I mean, sometimes if they're all buying, puking or whatever, yeah, they could be run over that way. But most of the time it's, bigger money. There's someone bigger fighting them and winning is, what's going on. And again, you're never going to know why certain money is doing what. And you're just wasting your time thinking about it. I always use the analogy, when you walk in a room and it's dark, when you turn on a light, do you need to take the light bulb out and look inside to figure out that it's giving you light, or are you just happy with the light? It's the same thing with this stuff, right? Know the areas, know your volume areas, know the volume event, and know they work, right? You don't need to know why someone's selling 7,400 sell ice like this morning. Are they hedging? Are they getting out of positions? It doesn't matter, and you're never going to know. The area is what matters. So when this market, it's got a very good chance to do it, comes back into this zone, you're going to see some kind of reaction because of all the volume that occurred in there. And it just gives you information. So say this comes back here and there is no reaction and it goes right through this, that's telling you something as well, right? So you may talk about this every day in my room, right? It's what you expect to happen is you take that trade. So say you're like, okay, this was so big, I don't care what happened after that. I'm playing a retest into the zone failure. I'm going short, right? And then you get short, you're like, and it does that. And you lose. You lose on your trade. Say you put your stop all the way up here and it rips right through there. And you're like, damn it, I thought that was, I don't understand. This should have helped. Right, it should have is the key phrase. Should have. If that comes up here, that's telling you something is off. This thing is gone, right? Same thing. Just use this example, and I was going to actually go over this. There's been no signals in crude today. So this is the same type of thinking, right? So if you guys know anything about market structure, which you should or you should learn because it helps you understand the bigger picture, you know what should happen in certain instances. So this is a good example I was using yesterday. Here's balance, right? Broke down out of this balance, came through. This should hold. If this is going to continue to be bearish, it should hold at least the high volume node as the last stand. What did it do? It ripped right through there. So if you know anything about market structure, you're like, well, that's a fail breakdown. This thing should rip. Did it rip? No. So if I were, I can't remember back what I did this day, but if I'm looking at this in bigger picture wise, I'm like, I want to be long. This is a failed breakdown. I want to be long. Well, what happened? Did it rip? No. What should have happened didn't happen. That should have alerted you right there. So if I was long and I lost, I'm like, okay, well, guess what? This thing's going to crash. That's exactly what happened. So it's not always what you think is going to happen. You can get the best trades sometimes on what didn't happen that should have, right? So this is another perfect example in crude. Here you go. Breakdown. Came up here. You even had more balance. But when we came up to this, if this was truly a bearish market, meaning it was going to head back down, it should have held this high volume node, right? Well, we got right through there yesterday. So what should happen? We should be doing that. What's happening? That's not happening. It's kind of starting to look like this scenario. So you can't really tell now until you get a move out of this. So the move's either going to be a big move here, but I'm telling you, if this thing cannot, and it was actually this guy, right? Got through that big one. If this doesn't start motoring up, we will make new lows for current stuff. So that's what I'm saying. What you expect something to happen, which is fine. You take trades that way. That's your thesis for the day. You take a loss and you're like, okay, well, why did I just lose long there? This market's supposed to rip up. That just gives you information. The move down is going to be a monster, right? So the same with the volume setups. So hopefully that answers your question.
I have a question for you, Scott. I mean, regarding the bigger money and them being wrong or battling it out with other bigger players. Also, I mean, we've seen like many times, or it seems like as price goes against these larger players, they just average in over time. I mean, you can see it in the liquidity heat map. As well as a lot of the iceberg transactions. So just wondering any kind of thoughts on that.
Right. Well, that's what's been happening. That's what happened this morning, and we saw it on today's Thursday. I think it was Tuesday. We were talking about it. We watched it in the room. We opened up, and someone in the room actually pointed it out today. They said CPI. This is exactly what happened on CPI. We opened up, we ripped, and it was like literally like this, but it was way more. It was like I can't even remember what it was. It was insanity. It was like sell ice, and we kept going higher. Sell ice. Then it kind of sat there for a little bit, and then just dove. I mean, this was basically this day right here. So yeah, that's them averaging in, and they just keep letting them have it. That was right here, I think. Let's see. Yeah, that was this day. Opened up, even put in a buying tail. That's bullish, and this whole way up, it was like 44.15. Actually, down here. This was the gap up, so it started before the open too, I think, and then all the way to the high here was like tens of thousands of sell ice. Right? It wasn't easy to trade because the zone was so big, but the point is they were averaging in possibly, I don't know, nobody knows, again, unless you're God. That's the only person that knows what they were doing besides them, right? And then they gave it up. All these buyers, and then I was showing this is another example, right, of the cumulative volume. So here's the day back here, because there's a misconception on what this is as well. Right, let's see if we can find it. What day was? I can't remember what's the date today. What was Monday's date? No, 4/11, right, or 4/12, 4/11. So now here it is. This is the Monday. Here you go, right? This was fun to watch because I love when the buyers get it handed to them. I'm just so sick of this thing being this bid for this long when the world's basically ending. So we're up here. This was the move, right? This started here, and this is pre-market obviously. So this is my time. So 6:30 my time is the open 8:30 Central, right? So they bought it pre-market, and then they were just buying it. There you go. This is basically, I thought it was 44.15, but it was a little lower. This whole way up, they were buying it. It was just sell ice. And this is the problem, or not a problem, but what you want to be aware of that most people don't see that are using cumulative volume. They're looking at this is cumulative volume. What is cumulative volume? CVD on Bookmap, right? What it's telling you is who the aggressor is, who is taking offers or hitting bids. That's what this is telling you. So what all that is sell bubbles on Bookmap. The sell bubbles are showing you market orders. That's what that is, right? So these were all heavy market buyers this morning who are wrong as of right now, right? So back to this. They were buying. So if you're just looking at cumulative volume, you're like, heck yeah, man, I want to get long. Look at this. These buyers are winning. It's just gone straight up. They're at plus 20,000 for the day, meaning 20,000. And this is what I just got an argument. There was a big thing on Twitter about more buyers than sellers. There's never more buyers than sellers. There's aggressive buyers, aggressive sellers, right? So the aggressive buyers, there can't be more buyers than sellers because there's got to be someone on the other side for the contract. There can be different prices, but there's never more sellers than buyers, more buyers than sellers. It's who the aggressor. So this is showing you, this isn't showing you more buyers, it's showing you more aggressive buyers. They were taking offers. So hopefully that clarifies that. So if you were just trading CBD, you're like, yeah, man, they're 20,000, this thing, oh, we're up here. You know, so you don't have the lugs, you don't have these incredible lugs, right? And you're like, yeah, this thing is we're going back to 4,500. Well, you don't know looking at this basic CBD that this entire move up was like 30,000 sell ice or whatever. I can't remember the exact amount, but it was ridiculous. We were just in the room like, oh my God, it was just, yeah, sell ice, sell ice, sell for like an hour or more, right? So all these buyers that were all aggressive ran into, and they could have been averaging in, like you said, Bruce, the sell ice, and then they gave it up and it broke. Actually, let's see. No, it broke hard. Let's see. It held for a while and then it gave it up. Right? So it was inside the zone for a while. And then I even said in the room, I'm like, you can feel the breath holding, right? Because all these buyers were like, oh no, right? And then you can see this starting to come down, and then they puked it. And we dropped like 60 points or something. So the point is, the CBD does not give you the whole story. I mean, look at that move down. That was the end of the close, and we caught that, right? But just knowing what's going on, bigger picture, really helps. All these buyers, the SI indicator, the most powerful thing I've ever seen in futures trading, lets you know, hey, yeah, they're buying, but the big money is they're absorbing all of these aggressive buyers, and then when the aggressive buyers are wrong, then they puke them out. And that's trading. That's what's happening in these markets, in every market, all day long. And if you can distinguish when that's occurring and what's big size, what's not, and what the big money's doing, what the dumb money's doing, then you have the ultimate edge. There's no bigger edge than knowing what the real-time volume is up to. I'm going to clear out some of that stuff because it's getting me a headache. We're still trading out. I don't think, did we get an ATR above here while I was chirping? Let's see, this was at 36 quarter. We got all the way up to 67. Yeah, that was an ATR, so I should be getting long this. Hold on. Right? ATR is 31.66. It's amazing how, I mean, look at that. That's the exact ATR again, right? So let me buy this right now, and then we'll determine if I have the right size on. Again, when I'm doing these webinars, it's hard to keep track of all this. All right, so, and again, this wasn't a ton of volume either, right? This was that 143 stop run, right there. And I said, normally I won't even draw that, but we're at that bottom of the market profile, so I'll play it to the long side if it got the ATR. So that was that. We got an ATR above here. Here's your retest, 90%. I just got to make sure I did this right. So 31.68 is your ATR. Right now. 28.5 is the ATR, 90%. So I needed to get in at 54, 55, right? Or 54 half, almost exactly. Look at that. Look how good I am. Hopefully that works, but you can see it's having trouble getting through this prior zone. I'm telling you guys, like this, you really want to know where these, because again, it's failed. It may fail again. I'll stop out, but that's just information. If this rips through here, that's information as well. Like, okay, this isn't holding anymore either. We're going to rip, right? So I'm long that. We'll see what happens. Again, I'm not thrilled about the size that was down here, but like I said, this is an important area as far as market profile is concerned. So if I lose on this, then fine. That's information. We're going to be out of that profile, and I'm just going to be just foaming at the mouth to sell this thing if this breaks. You can see it held this prior one too. So we try to get out of this current, held right here. Let me make this so you can see it. So, right. Just most recently tried to get out of this prior one here that I left because it was important, and it still remains to be important. We couldn't get through there. Now we're back in here. If this holds, your expectations can go to the other side. If it breaks, I'll lose on this trade, but guess what? You're going to see a huge sell-off, would be my guess. So cumulative volume is going down here, meaning the sellers are aggressive. Obviously, this is stop runs are part of this, right? But this is going down. So many times you want to look for divergences at important areas. So say this pops up, say we do get a rally and it pops up here and you see cumulative volume is continuing to go down. Well, that's like a warning. And it's not red light, green light. That doesn't mean you just sell it because you will get killed by doing that. Take it from me. But you want to note that. You're like, hey, wow, there's a big rally, but the sellers are still drilling this thing, right? And then if you get a bearish setup up here, then you turn around and flip and go the other way. But right now, this looks like it's gonna at least get back to the yellow lug, and then I will get out of one of these. The other thing I didn't check is how much I should have on right here. We'll check that here in a second. But the lugs confluent with something else are really good places to get out of most of your contracts. You got VWAP, downward sloping VWAP at yellow lug. So if this doesn't make it up here, it's about 90 points away. I will cover at least one of the two. Now I got to determine how many I should have on, which I should have done. Again, it's harder to do on these webinars, but because I got to be flipping back and forth between screens. So ATR is 32 now, so that's 64 points of risk. And then how big was the zone? Zone was 36 down to 22, so that's 78 points of risk, right? And then that's when you go to your little handy dandy risk calculator, the risk. See, you see NQ here. No, I forgot what I said. What did I say? 78. So you go down to 78. So I got the right amount on 2 lot. This is based on my auto trader. I didn't put this trade on my auto trader you can see on my website. You guys want information on that, but this is basically the value of the auto trader, $12,700. So I trade micros in that. We went over this last week, and you want to be risking at most 2% of your account value, right? Usually 1.5 to 2%. So if you're trading micros and you only have $12,700 account, and you don't even have to change this. This is showing you the normal contracts based on a $127,000 account, right? So that means I could put on $2,500 of risk per trade, risking 2% of that account value. If I'm trading micros, it's $12,700, still 2%. That's $254 instead of $2,500. So I have the right size on. Now we'll see what goes on here. We needed to get through this zone that it keeps struggling with. Did it here too. So if it's popping here, you should be getting some stop runs. Then we can add to this trade. See if we can get it up to minimum yellow lug. Let's see, natural gas. I never got filled on this. I think something else came in. No, it's only 100. So let's see if this even qualifies for a short setup anymore. If we got it more than an ATR above here, and I don't think I finished with my ATR explanation. So 62 is the top. We got all the way up to, so this is over 70 points away, right? That's well over an ATR. ATR is 48.5. So this is disqualified as a short setup. And we have to wait for something new. So back to my ATR stuff. So again, I used to use just a standard amount to determine what to do, once we got away from the zone. So ES was 3 points, NASDAQ was 10 points, gold, crude were 10 ticks. Well, that is not incorporating the current volatility, right? Like it worked when the volatility was low. That was a great way to decide, what these setups were. Now I use a full 5-minute ATR to determine. Otherwise, you don't know what the setup is, right? So the point is, if this is truly bearish, the stop run turns into a stop and hold. Well, it shouldn't be getting a full 5-minute ATR above here. That means it's not bearish in my view. Right? So that's why I use ATR versus a standard amount of ticks, which you should too, because you're adjusting to the current volatility. Right? You could use 10 points, but I'm telling you, you use 10 points when the NASDAQ ATR is 50. The thing literally moves 10 points, and you blink your eye and it's 10 points. So that's not telling you anything, right? So you need to be adjusting to the current ATR. I'm going to say that's a science too. That's not really an art. That you need to be paying attention to that, or you're just going to be throwing away money. As far as putting your stops in areas that don't matter, right? All right. Any other questions, Bruce?
Let's take a quick look. All good in YouTube, and no, we're all good here. Also in Discord.
Ready? So gold here. Hopefully I didn't miss a trade here. Now what happened here? This is exactly what, this is in line with my thesis of bullish, right? And what just happened? We had the Dumb and Dumber down there. Remember, we failed to get in that market profile composite. I'll show that again in a second. Then you got this. That's an ATR. ATR in here is 27. It was a little higher when that fired off, but it definitely got over the high of the ATR today. It was like 35. That's more than 35 ticks. Here's your retest. So the two markets that retest the most there's three markets that retest the most. I'd say number one is crude, tied for two, actually tied for one is natural gas and crude, but a close second is gold. So you don't have to be chasing stuff. You can wait for your retest failure. Exactly what's happening here. So I forgot where we were in the lugs here. There was a reason I was waiting for a retest, I think. Oh yeah, remember I said I'm pretty sure we have new, I don't know why this is not drawing new lugs. I wish she was on this webinar so she's in her trade room, so it's great where you got a problem, you just literally just type her name in there and she responds. But these should be new lugs. But regardless, I know, the new lugs were drawn. Yellow would be right around here, red's down, or blue's down here, red's up here. So that's why I was waiting for a retest failure. So now I will go along this market. Here's your retest, shocker. It's like I've seen these movies before or something. Again, 28.5. So let's figure out 90% of that. That is 25.65. So we round up because it's full ticks, 26 ticks above here. The top of this zone is 08, 34. So, and I want to determine how much I can trade, just like we did, or the size I can trade, just like I did with NASDAQ, so I'm not over trading my account. Right? So, 26 ticks, enter, 26 ticks below the zone, that's 52 ticks, and then the zone is another, it looks like 17 ticks, 18 ticks. So that, what did I say, 52 and 18, so that's 70 ticks of risk. So then you take your calculator, go down to 72, I can put 4 on. So that's pretty close. Now, do you see, this is just like the other one, I can't remember what market I just showed, but am I buying just because it's in here? You could say, first retest, I'm getting it, I don't need to wait for 90% of an ATR. Go for it. I've just, from again, thousands of setups I've watched, the best entry is waiting for it to get out of here because you don't want to risk this than that. So if this rejects again, then you got a pretty damn good chance for this to rip, right? That's why I trade it that way. So that's what I will do there.
Adrian has a question here for you. I asked a few times. How do you interpret in your drawings of the icebergs on screen that that are small in number but long in time, horizontal line? I didn't quite understand it, but I think like you're drawing up your lines, and then maybe it was a smaller iceberg, but you're still. Do you go back and I guess refer to it?
I don't really understand the question. I mean, if you're saying small size, well, that's why I have this on reset mode. So this is an example, right? So if this was just one stop run, my threshold for gold is 150, but on its own, this was basically under threshold. And then if you get another one right after that, well, then you can draw that zone. So if you're getting, you come into an area and you see like, it happens in ES all the time. Let's see if we can find it in here. I'm going to get rid of this middle zone here. It's giving me a headache. Okay. So I mean, this is, well, a good example was, let's see, maybe here.
A good example he's asking is like the long iceberg on gold right now.
The long iceberg on gold. Talking about.
It's been running for a while, he said, but I guess you're hitting that zone. You drew your lines there.
Well, the zone is from the stop run. It's not from any icebergs. This was 120 sell ice. That's not threshold.
on the bottom, I guess.
I don't know what he's referring to. But what I was getting at is if you see an area where it goes like it's not threshold, but say it pops up and it's like 110, then right after that 140, then 180, 80, 200, or whatever. You can make that whole area where whatever price is incorporated that, you make that one zone, one big zone.
I think he's talking about, Adrian, this is drawn by Bookmap. There's a live iceberg that has not filled completely. 67 have traded. Scott, just go back to the screen you were just looking at. Scroll, see the bottom. Yeah, see how it's like still in the market. Yeah, go back to the live market, Scott. Yeah, see the white line, the 67 down there. Yeah. So that's the there's a toggle button in Bookmap if you want to show the icebergs that are still active, like
Right.
yeah. And it has not completed yet. It has not been pulled. It has transacted 67. There's only been one transaction so far. There might be multiple. The last transaction was for one. Anyway, that's what it's showing. It's pretty amazing to be able to see that it hasn't been fully executed, has not been canceled. It is still sitting there in the market. You'll see
You
also.
can see when I unclick this, you can see how it disappears.
Right,
So,
and you also see like how they may move it too, and you'll see all of that activity, which is pretty incredible.
right. But this doesn't, again, this is nothing. 67 lots is not a big deal. But yeah,
We
if
don't
you
know.
see,
It might be though. I mean,
it could be.
yeah.
But this is the thing, right? You've got to be careful. This is where guys make mistakes using this on chart, right? I need to see concentrated volume in one area. That's what moves markets, right? So say this is 1,000 iceberg, right? Yeah, that's good to know, and that's what's showing you. But say it comes down here and this thing tags 15 times. And every time it like draws out another 100, another 100, another 80. Yeah, I mean, it's good to know that there's one guy buying here, but is that, so say it comes down to the 15th time and there's like 90 left out of the 1,000 that traded. So, 910 traded and then there's 90 left. Well, is that 90 on this next move down? Is that last 90 lot going to hold the market from pummeling through here? No. So that's what, yeah, there was 1,000 here, but it was drilled so many different times. I want to see when the market comes down and runs into 1,000 buy ice in one area. I mean, at one time. See what I'm saying? So if it's convoluted, you want to be careful of saying like this drags over and you see 1,000. You're like, oh, there's 1,000 buy ice. I'm going long. Well, yeah, but it got tagged 45 times. This last move down was only 90 of them. It's going to go right through there. You see what I'm saying? So I want to see concentrated buy ice, sell ice areas, not. But it's good to know. Yeah, absolutely. But I'm just saying, be careful with this number. If it's tagged a bunch of times and now this last one is there's a little bit left, it's going to go most likely go right through that because that's not the current trade. What's happening right now? Does that make sense, Bruce?
Yeah, absolutely. And that's why you have the alerts set up the way that you do. So you're looking for a threshold alert, and then the audio alert.
Right, and then that's where you set this stuff up. Then that's the subchart, right? And you want to make sure. So I use my stop. This is gold, right? I'm on reset. My icebergs are at a minute because icebergs is obviously accumulating. I don't want my stop orders being more than 10 seconds because stops are usually quick. That's what I want to see, the quick move, the quick puke, right? You shouldn't have stops over 3 minutes. It's not really a stop then, in my opinion. I mean, there's still stops in there, but I want to see that one concentrated puke. That's why I have it for 10 seconds. And then, so this is what this is showing you, right? And then this is your audio alerts. So you want to make sure these match this, or else you will be getting signals down here that don't match what your little computer guy is reading to you, right? So once again, I got 150, so I do not hear anything unless it's at least 150. And there's your stops, 10 seconds. I don't know why they have these opposite. You should tell them to put the new version might. I mean, why do you have stops on top of up here? It's just confusing, right? Or at the bottom. So you have on the subchart stuff, you have icebergs on the top, and then you come down here. This should be icebergs on top. That just makes it easier to understand, especially if you're new to it. You shouldn't have down here, but that's my opinion. So anyway, 150 for 10, and then icebergs, 150 for 60, and then I have what I wanted to say. You can literally put anything you want in here. You could say, hey, gold ice, you moron, or hey, heads up, huge money ahead, whatever you want. Make it funny. You got to laugh in trading, guys. We were doing the other day, we were playing, we wanted the market to go. The one day I had a guy, I think I told this story last time, but we had one guy in my firm that every time we wanted the market to go up, he'd play the Jeffersons moving on up. So we've done that a couple times. If I have multiple positions on, like NASDAQ and ES, I'll play that. And then last week, this Friday afternoon, we played, we were all short, and we played Highway to Hell, and then what was the other one? Burning Down the House. The Highway to Hell didn't work, and as soon as we turned on Burning Down the House, the market sold off like 20 points. So that was fun. The point is, you have to laugh when you're trading, or else you literally will be put away in a loony bin. I do anyway. And that's why I talk to myself too, because if not, my head will explode. Any other questions, Bruce? There's not a lot going on here besides getting tortured by this.
No,
And
I
again,
think we're caught up here.
there's a reason we're being tortured. What's the reason? Because there's no big money playing. And you're just getting algoed right now. So if you are participating in this, you're getting algoed right now. That's what that is. There's no big money coming in. Look at these. This is terrible. Remember, I know it's a bad time of day. Again, you guys have seen my P&L. I'll show you that again just to hammer it home into your head. But from 10 to 12 Central, I get killed. And I've always gotten killed. I got killed when I was scalping. I've lost millions and millions and millions of dollars between 10 and 12. Right? That's because that's when the big money goes to lunch. New York, they step away from the screens, and then the algos take over. The algos know there's no big money coming in, which is their worst enemy, and then they start to do this to you. Okay? So once again, just to hammer it home, I show it every week. Here's my P&L. So total 43,000. That's before commission. So 39,000. This is since like mid-December. Again, trading tiny, guys. This is not trading like 20 lots. This is trading 2 lots, right? So I know there's a lot of guys looking like, well, who cares? I actually had one guy email me. He's like, well, how do you think you're going to make a living with that? Blah, blah, blah. It's like, okay, well, this is what my account size right now permits me to trade. And, so average lot of probably a 2 lot, right? I would say. So if I'm trading a 20 lot, this is $400,000. That's a good return for 3 months, right? So the point is, don't focus so much on that. This is what you need to focus on, right? You guys should all be using this. There's deals on my website for everything, including this. Speaking of that, and we haven't had that up either. Nothing's going on. That's tick strike. Oh, and by the way, while I remember, he actually messaged me yesterday in Skype. They have, again, there's discounts to this on my website too. This is tick strike. It's telling you it's an awesome indicator to know, audio indicator to let you know what's going on. In other markets, if you're not watching them, and you can set this meter from 1 to 15. 15 means it's max buying or selling, so on and so forth. So you're going to know, like when we're moving down, you want to see these stocks getting hammered, right? If they're not, that's telling you something you better be careful, type of thing. Or you can use it. I use it to know, like, I'll know like if soybeans start getting killed or they're buying like crazy, because I can't look at everything at one time. So what he told me is Sunday is the last day. They have a lifetime deal. They're taking that away on Sunday. So just so you guys know, he told me to pass that along. So now this Trader Sync again's on my site. You can deal with this as well. You should all be using something like this. I used to use TraderView. This is TraderView on steroids times 1,000. This thing's awesome. Again, I really need to dive into how everything it does, but in the basic sense, you go over here, look at my hourly P&L. I show this every. I mean, it's getting even worse. Look at this. Look at the. Like, I'm talking to myself, and I keep trading at this time of day. It's harder to do because of my trade room and stuff, but I mean, are you kidding me? So my P&L is plus $43,000. Look how much I've lost it from the 10 to 11. This is showing 9 o'clock, but it's really the 10 o'clock because it didn't adjust to the time saving. daylight savings. From 10 to 11 Central, I have lost $62,000. Like, that is just not acceptable. How do you avoid that? Oh, how about leaving? How about going to work out? How about meditating? Anything. Get away from the screen. I'm talking to myself again for the 4,000th time in 24 years. The next from 11 to 12 is now much better. I gave away 20. So you're talking almost, what is that, $90,000. So my P&L right now would be over 100 grand trading basically average of 2 lots if I didn't trade this time of day. Now, if that's not eye-opening for you guys, I don't know what is. So you should know this stuff. You should know when your best trading times are. You should know your day of the week. Once again, Mondays, I got smoked on Monday, per usual, this Monday, right? Like, look at that. If I don't trade on Mondays, or trade half size, or trade simulator on Mondays, right? You can make exceptions, right? Just like you can make exceptions to the hourly, right? So you shouldn't, for me, I should not be trading at this time of day unless, what? Unless I see this. So you can make a rule for yourself, right? Because I guarantee I'm not the only one that gets smoked at that time of day, because this is what starts to happen. So you can make a rule for yourself. I do not trade between 9 and 11. You shouldn't even be at your screen, but if you are, you shouldn't be trading unless you start to see 2 times more volume. You could maybe say, I need to see 200% more volume and at least 2 bars, the prior 2 bars. Then I can trade, right? What is that? That can be an exception. Kind of like the same thing with the days of the week, right? So Monday, I should say I should back off, trade half size, unless Mondays I see huge relative volume coming in at the open, so then I can trade it, right? This is just ways you can avoid this, guys. There's just no reason to be giving away this kind of money in algo fest time. There's just no reason. It's just dumb. And I keep saying it, maybe in another 25 years I'll heed it. But so I got off course there. So again, most people say, "Oh yeah, well, of course this is a bad time," but this is not showing you. So this chart is, well, I'm not going to show that one right now, but this is showing you this exact time period. So if you see this thing not even making 100% at this time period, then you really know it's bad, right? You should be at least be seeing 100%, which means at 1023. The 1020 to 1025 time period for the last 30 days, this is basically normal. Okay, that doesn't mean it's good trade, right? But what I'm saying is if you start seeing it's at 50% on top of being a bad time period, I'm telling you, this is most likely going to happen to you. So if you like being whipsawed, then trade it. Again, you could trade ranges. You can be like, I'm going to get long there and I'm going to get short there, fine. But it's going to break out here eventually, and I'm telling you, every time I decide to do that, or did when I used to do that, that's the time that it broke out, so I stopped doing that. But
Gold ice iceberg sell GC 174 contracts.
hope I didn't get filled.
Gold ice iceberg buy GC 228 contracts.
There you go. This is why I wait for retest failure. If I've just bought it in the zone, I now just got smoked, right? Didn't fail. This is now canceled. This idea is done. We have a new setup. We trade off of that. We have a new volume event. We trade off of that. We got a little tick strike going. This is good for my long. Obviously, you see that these are the highest weighted stocks. These are the FANG stocks that are the highest weighted in S&P and NASDAQ. Let's enjoy our little run here. There you go. Run like the wind. So let's draw this in. I'm going to get rid of this one. So here's a good example. Here's that iceberg. It's still in there. It's good to know. Does 71 a lot? No. Not on this test, right? This is 234 sell ice on top of it. And you can see that line here too. A lot of that is one house as well. You can see 112 there, right? And let's get rid of this. All right. So again, pick where it started. Follow it along, follow all the prices to where it ended. Draw your zone. I use black for sell ice. There you go. now let's see if the new lugs have finally been drawn. I'm not holding my breath because I think I need to restart my zero chart for some reason. Yeah, they're not working in gold for some reason, but oh well. I have that, but what's most important? Where are we at again? If you guys remember. Another attempt. Right? This is, let's look at this. That's this puppy right here. That's from end of March. Right? You can see it's still relevant, even though we've traded through it. So, when you trade through a composite like this, see how I cut this one off because we traded through it and made this huge one. You can cut it off, but if the market keeps respecting it, you want to leave it. And this market keeps respecting this. Again, yesterday launched out of it, tried to get back inside. Nope. Today, tried to get inside. Nope. Here's another attempt. So, and here's your volume event. I'll tell you right now, there's no better edge than these and lug levels as well, but I don't have those up right now, obviously. But these market profile composites with the real-time volume event, whatever way this breaks is going to be very, very likely the next move. You have to probably favor this, right? Because it's tried a couple times. I know this market is bullish, but it doesn't mean we can't pull down to this. And we're day traders, right? So you could take advantage of this 70 tick move here potentially, at least to the bottom, to the top of this guy, right? So once again, though, here's your sell ice. This should hold if it's going to get inside here. If this rejects again, then you're finally probably going to get the rip. That's why you want to know the real-time volume, what's happening. Guys looking at bar charts have no idea that someone just came in and sold 234 hidden sell orders. That's pretty important information. It is the information. So again, ATR is 28.2. It was 28.65, sorry, 25.65, so it's 26 ticks. So here's an example too, right? Like I've been saying, I don't know where we are in the lugs. I'm assuming we're below the yellow lug now, but we're at a market that top of that market profile. You could say, I'm taking this as soon as we move 90% out of here, or 80 or 70 or whatever you want. You could be aggressive in this situation, meaning if this fails again to get inside that market profile composite and we come up here, you can get in aggressively. I would not give you a verbal lashing in my room if you didn't wait for retest failure. But you saw waiting for retest failure, that just saved me a big loss. One, I didn't get in this trade aggressively. I would have taken the loss. Two, I didn't get in this trade aggressively when it came back to the zone. I would have taken the loss. I was waiting for that. So you would probably behoove you to do the same thing because, again, this is a close second for markets that retest the zones. So you don't need to chase it. You can wait, and then if it fails again, then you get in. And especially if it gets above this stop area, bye-bye. So I'll wait for a retest failure. All right, Bruce, we're out of gas here. Any other questions?
No, I think that was an excellent rant.
That was pretty mild. That wasn't even a rant.
Yeah.
The only rant was me yelling at myself about the 10 to 12 time period. That was the only rant.
Yeah. No, I think we're all caught up here on questions, and markets are closed tomorrow. And Scott, I put your information both in YouTube and the Discord chat there. So if you guys have any questions about Scott's trading, as well as some of the things that he offers, trading room and other stuff, his course, etc., you can find it there. And just one more note: no webinar tomorrow. We are, the markets are closed. However, I may, I need to kind of look into it. We may hold an event anyway at this time in the morning. I'm not sure yet. I'll let you guys know in Discord, and it'll be a special event though on building a trading plan. All right, we're going to get more involved into that. So I just want to kind of float that idea out there, but I'll let you know more details later. Okay.
Yeah, that's very important. Obviously, it's the most important. So that's what basically the setups are, right? That's my trading plan, and I have rules. And if you don't have rules and you're in here flipping orders in and out, you're not going to make it. 100%, no chance. So you need to trade. If your algos are 80 to 90% of the market, if you are trading against algos, you probably want to trade like an algo. So trading plan with rules, with your risk monitor. You trade according to your risk, which you're risking on your account. And then you just put on the trades, and then it's a percentage game, right? And if you have an edge, and I'm telling you, if you use this, you have the most powerful edge you can possibly have in futures trading. If you do all that and you follow your rules, you will make money. And that's it.
That's what we're looking for.
Absolutely. All right. Well, happy Easter, everybody, and I will see you next Thursday.
Yeah,
Again,
thank you very much,
do
Scott.
this every day in my trade room as well.
Yeah,
Surely.
yeah. Happy Easter, and yeah, we'll catch up with you next week.
Okay, great. Talk to you guys later. Thanks.
Okay, thanks, Scott.